Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Folks, on today's show, we'll explore a specific sector in the market. You're going to want to fuel up for that conversation. We'll get there in just a minute. Seth Uditsky, Sam Case, and your host, Mark Manila.
Good morning, everyone. Today's verse, or this week's verse, 1 Corinthians 4:2. Moreover, it is required in stewards that one be found faithful. I love that verse. I love clean, concise verses that say it like it is. Don't you, Seth?
I do, Mark. Yeah, we mentioned this yesterday. You know, our job is rather simple. I want to be careful saying easy, but it's certainly easier than God's job is. God has the tough job. We have the easy job. Just be faithful. Not always easy, but it is simple. We just got to be faithful. Be faithful over what the Lord's entrusted to you. And we are promised too, Mark, that if we're faithful in little, the Lord will give us more. That's not a prosperity gospel promise. That's a reaping and sowing promise, that if we do well with what he's given to us, then he'll give us a little bit more and a little bit more. It's a great promise. Really cool.
Yeah, and then we get to be found faithful in that. It's like a training ground to be an executive in heaven.
Yeah, pretty cool stuff, Mark. Hey, folks,
amen to that.
We hope you'll give us a call. We'd love to hear from you. The number is 610-363-1110. Join us on our live chat as well, financialissues.org/watch. Hey, Mark, yesterday we had an interesting conversation about the price of gas, the strategic petroleum reserve, the war in Iran. And so we thought, it'd be a good idea to fuel up for that conversation. Sometimes I amaze myself with the humor.
Oh, your puns are just special.
And so what we're going to do is,
I think
Mark,
you need to explain the joke. I don't get it.
People don't understand it. It's crazy. Let's talk about the energy sector today, guys. The energy sector, do a little sector analysis. Mark, let's start here. How does the energy sector look right now from a strength standpoint?
Well, it has been stronger. Over the last 6 months, it's been relative strength-wise. It's been one of the strongest sectors. It and technology have been battling back and forth for first place for about 6-8 months now, which is understandable because technology has the whole AI theme. AI has the whole data needing, huge data centers, and data centers need power. So they're battling with each other and they're fueling each other at the same time. So it's been very interesting. Right now, it's been slipping back a little bit. Its relative strength to technology is dropping. That does not mean it's a bad thing. There's always got to be a first place, right? So right now, it's just energy doesn't have the same thrust it had before the deal with Iran. I guess that's what it is. Before the deal with Iran, it was like, oh, everybody's got to be creating energy. We're going to be short energy. Energy is needed for AI. Energy is needed just for everyday life. And the Strait of Hormuz is going to end us having energy, creating electricity and whatever.
But was there panic buying, or was it maybe justified buying?
I think I wouldn't use either of those terms. I think it was hype buying. The hype for
kind
the
of
AI
in between.
needing all the energy and stuff. But at the same time, the energy industry really needed this kind of hype to get it on a path to meet all the needs of the U.S. and the rest of the world. So sometimes this hype buying can be a good deal to get things moving. Now we got companies that have become a little more leaner, a little bit stronger, and a little more focused on what they're doing, and that's a good thing. Right now, I for a while I was feeling like the energy sector was way overbought, but it has slowly pulled back. Energy doesn't look technically overbought right now, but I have to say a lot of the companies in there, their PEs have definitely skyrocketed, so it makes it very hard to find companies in this sector right now. So we just got to be careful. It looks more like a hot sector cooling off to me than anything else, if that helps you any.
Mark, could you explain this to me? When gas prices fall, as we're seeing, What does that do to the energy sector? I mean,
$3.92 nationally.
Yeah, so
Yeehaw.
I love to see that, but should I not be as excited if I'm invested in energy? Because I feel like that could cause the energy sector to drop. Am I thinking about that right, Mark, or is there something I'm missing?
Yes, I believe that your thoughts are good, Seth, in the sense that they overlay certain parts that they're absolutely right on and other parts are not. Let me explain that. When crude oil drops, upstream oil and gas companies usually feel it first, and not in a good way. You know, lower crude prices, well, first of all, they reduce revenue, right? That can cause compression on margins, free cash flow, earnings, stuff like that. Also, when oil drops, if it gets below a certain point, around $65, drilling budgets dry up, because it costs more to drill than it's worth, and you take too long to recover your money to drill. So there's a lot of things that happen. But it's the upstream oil and gas companies that usually get hit first. And the reason this is confusing is because this sector isn't a one-size-fits-all. You have things like oil drilling, like we talked about. That's really at the top of the pyramid on that, but you come all the way down to where you get to the refineries, and each one of those is affected differently. For example, midstream usually doesn't get hit as hard because they have contracts for moving the oil, not the price of the oil. So if it's at $90 or $60, it still costs the same to move it through their pipelines. So it has a little bit steadier. And oil field services, like we just talked about, they suffer the most when it gets lower. Refineries can sometimes benefit from lower crude because it costs less for them to bring that in and process it and get it out, if the market is willing to give them the margins they need on that. So yeah, there's different things that can happen, both positive and negative, depending on the part of the energy sector that you're in, bottom line on it. So, to make it easier, I kind of thought maybe, let's boil it down to what it means as an investor. Is the energy sector overbought? Well, I'd say it's extended from a performance perspective or price, but it does not show the classic overbought conditions. If you look at relative strength, it's well below 70 and stuff, but that doesn't mean it's not highly priced. What's causing the energy to pull back now? Well, that's easy. Iran, the Strait of Hormuz is open. We supposedly have a deal. It looks like energy's flowing. We have a glutton of oil that has been sitting, waiting to be delivered. So for a short while, that's going to be the main effect. And then normalizing oil again, and the transportation and the trading of it will help bring that down too. What I like about this more than anything else, Seth, is this. I really believe that when times change, when we see pricing drop, that's a good thing, I believe, across the board. Me and deflation, we're friends.
Oh, yeah.
So low...
Deflation is your middle name, Mark. I'm just kidding.
Deflation. Deflation.
There you go.
Yeah. So here's the deal, though. Deflation can be hard on some companies, but that's the weaker company. Low-cost producers with strong balance sheets usually hold up better when prices fall. So this will reveal some really good companies, is what I'm thinking. And when that happens, guess who will be the first to know?
Well, hopefully us.
Hopefully, yeah.
Right?
Hopefully our partners, exactly.
There you go. That's great stuff, Mark. 610-363-1110. Mark, a final question for you here in this segment, and maybe we can carry this conversation over into the next segment because there's even some questions in our chat about it. What other sectors tend to track energy in terms of movement? I would think utilities, industrials, they might move similarly, but is that the right way to think, Mark?
They don't, though.
Okay.
That's the interesting thing.
Yeah.
Utilities are a whole different beast because they have government power behind them in the sense that their pricing can be changed as necessary, and they price in expansion. They price in, they can have massive amounts of debt and it'd be okay because they're regulated and they have the revenues coming in for that. It's not like they have competition. Does that make sense?
Yeah, absolutely.
So utilities are a little different. Industrials, again, they're on a whole different track. It does affect industrials, but it doesn't dictate it, if that made sense to you.
It does.
I really believe, yeah, okay.
Yep, absolutely. Folks,
And that's really important. That's why we have different sectors, because the way they respond to different economic news, the way they respond to different consumer spending, all that affects them differently. And that's why we compare them to each other relative strength-wise, which ones are stronger, which ones are least strong. And right now we have technology and energy and communication still at the top. So it's a good market right now. And that's why we're here, though, to help you to make those good decisions. And we're going to get to your questions when we come back from this break. The number is 610-363-1110.
You never have to lose access to financial issues. Stations change programming, shows come and go, but your connection to financial issues doesn't have to. With the website and app, Financial Issues is available whenever and wherever you need it. You can watch the show live, listen on the go, or catch up on episodes you've missed with on-demand access to previous broadcasts. You'll also get the complete Financial Issues experience, including exclusive bonus content like Friday's Overtime segment. And it gets even better than that, because the website offers even more ways to stay informed and engaged. Be part of the conversation by joining the live chat during the show, read articles and market insights, and explore educational videos to help you become a better steward of God's resources. So what are you waiting for? Download the Financial Issues app or visit financialissues.org today. Stay connected, stay informed, stay with Financial Issues anytime, anywhere.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound. And that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Folks, give us a call, 610-363-1110. Today's show brought to you in part by our friends over at Crossroads Kids Club. So appreciate the work that Crossroads does. Of course, this is their gear up season. They're in summertime now, so they're preparing for the next school year. You can reach them at reachOurSchools.com and learn more about how you can partake in spreading the gospel to kids in public school. Pretty awesome. Mark,
Amen to that.
Here's a kind of a really interesting follow-up question. Actually, Sam posed this question. It's a great one. But the question is this: how should the average investor, like the listeners of Financial Issues, how should we look at the energy sector right now for potential buys? Understanding everything that you just told us in the first segment there, are there options out there?
Well, actually, I love that question, Sam. That really pulls it all together. The reality is it's hard to find a really good buy right now because of the price valuation, even though the sector in itself is not overvalued. It seems like the stocks that have the financial steel that we like are all overvalued because obviously other people are looking for the same sort of companies, those that have strength, that have free cash flow and positive trends in their earnings and in their revenues. So I guess the way I'd land that plane is to just say, now's a good time to be watching for those opportunities, but I don't think it's going to be very easy to find something to jump into at this point. If you do, great, jump into it. But right now, you're probably going to watch and you're going to see, and then the the PEs will start coming down, and as that happens, you'll see some opportunities in that sector.
So the double W's, watch and wait.
Yeah, watch and wait. Yeah, because there will eventually come some opportunities in the future here. But right now, I don't see very many. There might be some new ideas, but those will be a lot more risky than most of our financial issue partners would be willing to take, because their revenue, there's no earnings at this point, or they're a new startup that may have a 3-year worth of cash to burn before they get to profits and things like that. So just be careful at this point.
Mark, what about for those listeners who are heavily underweight in energy? Is it okay to wait in cash? Should they look somewhere else?
Yeah,
okay.
It's okay to wait in cash, or if you find opportunities in other areas, you can a little bit overweight those. I know some people say, well, Mark, I'm looking at the broad list or the tracker, and it seems like a lot of the companies are on hold right now. And absolutely, because they've ran up so quickly that what we're looking at is, will they be able to continue their growth with these PEs where they're at, or will they be pulling back? And if they're going to be pulling back for the next 3 to 6 months slowly, why would we want new investors to be putting money into it? So we move them from buy to hold, which means if you already hold them, that's great. There's nothing wrong with them, or we would have put them on sell, not hold.
Good stuff, Mark. 610-363-1110. Mark, we've got an interesting question here from Ronnie. He's 62, and kind of a different aspect of this conversation we're talking about here, because as he's evaluating his portfolio, he says, I believe I'm too diversified in some of my sectors like energy as well as utilities. Nearly all my positions are on hold right now, so that lines up with what we were just saying, Mark. Saying, can you add to the hold position why they were put on hold? Like, were they valued too high, weak on some fundamental criteria, or maybe go over again how you evaluate positions like using the PE ratios, earnings per share, et cetera, et cetera?
Yeah, good question. Yeah. Right into what I was just talking about. Usually a position is acceptable to hold if it's on hold. That's what we mean by hold. It was on buy at one time, but then something changed. And the thing that normally changes is the valuation. Usually the company runs up, and the PE gets so high and the valuation gets so high that there's a good chance that there'll be a pullback or a correction on that stock, or a slow drip down to normalize its pricing on it. There's other things that could cause it to go on a hold. Maybe its debt has elevated, and at this point we don't quite understand why. Why did the debt to equity go up from 16 to 65 or 65 to 110? Maybe it was some sort of accounting thing, or maybe it was an expansion. But we need to understand that before we recommend it as a buy any longer. So we put it on a hold, because those who already hold it, nothing has happened to cause it to drop. The earnings are still good, or the revenues are still good, the projections are still good, but we see a glitch. So we put it on hold until we can figure that out. So new money doesn't race in, maybe too soon or too late, whatever you want to call it. So we want to be very careful. So there's different things that can cause us to go from buy to hold, usually valuation. Also, things like earnings and growth have decayed. And usually this happens over a quarter or 2 quarters. If we see earnings and growth slowing down or turning negative for a quarter or 2, we really want to find out why before we put this on a sell. If the products and services they've created, the competition are starting to trounce them with better products and services, we may move that to a sell down the road. But usually that's not it. Usually it's just cyclical thing or something else. So we move it to a hold till we get that all figured out. So it could be a little bit of everything, but the main thing to remember, hold is not bad. Hold just means hold. If you own it, you're welcome to keep. And there's a lot of reason for that. For example, let's say that something did run up value-wise, price-wise, just shot through the ceiling because, everybody got behind this newfangled artificial intelligence. And this, they put AI at their name, after their name or something, and it ran up. Okay, well, we look at that and we say, okay, this is ran up, but we don't want to let it go yet until we figure it out. If price actions gets extended, we just don't move too quickly on it. That's all. So there are times where we will move from hold to sell, but that is only after we've researched it and figured out, this could take 3 to 5 years to recover. And so let's say you had a stock with dividends, good paying dividends, and one of these things happened, and we wouldn't put it on a sell. We put it on a hold till we figured it out. Meanwhile, you're getting paid good dividends till it does either normalize or comes back to its normal growth projections and the stuff it had before that bad quarter or bad 2 quarters. Well, that's a good thing. Then it goes back on buy. You got paid good dividends while that was happening. And before it gets, if it's going the other way and there are real strong reasons why the decline is happening, and then we put it on a sell, you got paid to wait to put it on the sell.
Yeah, not so bad, Mark. It's good stuff. Okay, Mark, here's an interesting question along these similar lines we've been talking about. Robert apparently wants to watch you pull your hair out because he's asking, Mark, I'd love to hear your analysis of natural gas.
Well, natural gas is an interesting product. Remember, it has a utility feel and impact on it. It has a commodity feel and impact on it. So it's an unnatural beast is the way I look at it. And I agree with you. It's one of those things. We are becoming, the United States is the #1 exporter, I believe now, of natural gas. Maybe that it goes up and down, but we could be after Trump got back in and he opened up the gates and allowed the trading to go on that was shut down by the previous administration. So natural gas can be an interesting investment. That is correct, by the way.
We are the #1.
Yeah. So we could be it can be a good industry to be looking at. Just use the same rules you use elsewhere. Make sure the financial steel is there. Make sure that the trends are there. Make sure it's all there and the pricing hasn't gone through the ceiling. A lot of people were chasing natural gas for a while and they overpaid for companies because of the trend, because of the hype. So be careful.
Mark, speaking of being careful, today seems like it's going to be a day in the markets where we'll be seeing a lot of red where we'd normally love to see some green. Yesterday, the indices opened kind of mixed, and they continue the day relatively mixed. The Dow Jones ended up the winner of the day. It was up about a third. Same with the Russell 2000 was also up almost a full percent. But the S&P and the NASDAQ were both down considerably. It looks like this morning the market's heavily down, and it seems to be, Mark, that it's the tech-heavy NASDAQ leading the way down.
Imagine that.
Exactly. I know. It's the old roller coaster, Mark. The big name players, Micron, Apple, SanDisk, all down considerably this morning.
Looks like
Mark,
a big sell-off.
Yeah, it's exactly right. And I think it's a very good reminder for us. Number one, not to panic when we see red days like this one, and number two, to be careful as well, because the markets are certainly a beast, like you've said.
Yeah, you're nailing it.
It makes sense, too, considering how high the NASDAQ's been going, especially these stocks. People are going to catch those profits.
Well, I think also there's a psychology here. Everybody had put their hope in SpaceX as this incredible company that could do no wrong, even though it was burning cash like
rocket fuel.
Yeah, like rocket fuel. Yeah. So, well done, Sam. We can always rely on you for one of those.
The jokes are flying this morning, guys. It's great.
But because SpaceX has been, as we thought it would happen, it would spike and then start coming down, and it's has been
over
coming down
16% yesterday.
Well, it's down
16.4.
I think it's down. What is it today? Down. Or has it even? Yeah.
No, it's not yet. Not yet.
Yeah.
We'll find out.
So we're looking at these things and we're saying, okay, so people see that and they go, oh, well, maybe there is a lot of hype in the market. And then they started imposing that on everything else that was hyped. Like, I don't know, AI, data centers, chips, all the different stuff. And they start doing what we've been saying to do now for quite a while. And that's to prune and trim your winnings, your gains, your profits. You don't have to get rid of the individual stock, but you should lock in some of those profits and then plant them elsewhere so that you get some more diversification. And as the markets normalize and things start going up again, you'll have more trees to see fruitful earnings on.
Mark, that's one way to put our verse of the week into practice. 1 Corinthians 4:2. It's required in stewards that one be found faithful. Sometimes faithful stewardship means pruning those gains, like you said, planting
absolutely.
elsewhere. I love that analogy. It's helped me out a lot, for sure.
Yeah, the stewardship is different than just your typical investing, secular investing. Stewardship is more than that. It's not only managing risk, it's managing your profits as well. So a good steward will manage the profits. They won't let the harvest get old and then die in the field. So we hope that made sense to you. And if not, you know how you can correct it. 610-363-1110. We'd love to hear from you.
make a point. No matter what happens, I'll always be there for you.
I know.
Every day across the globe, big business agendas go unseen by investors. Things that go against your core values and beliefs. It's time to know your investments. Abortion, alternative lifestyles, gender and identity confusion. If you believe in protecting marriage and life, children, innocence, guarding masculinity, restoring families, defending religious liberty, invest with your values. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Folks, hope you will check us out at financialissues.org. Of course, the best place to watch the show, you'll never lose us there, financialissues.org/watch, or the FISM app. Great place to watch it as well. And the phone number is 610-363-1110. We'd love to hear from you guys. Mark, here's a good question from Nate. Nate is saying, I have a particular holding in my materials sector that is up 164%, and I'm overweighted in this sector. Would it be good to sell some of this particular stock to balance some underweighted sectors? Also, what is a good rule of thumb for the future on when I should take profits?
Okay, well, good questions, Nate. And the answer is yes and no.
The short answer is yes.
No, yeah, the short answer is yes. And take profits when they get to a point that they affect your overall portfolio, or they override your sector so much that it becomes too dominant for that sector. That's when you should be doing it. So you look at the sector and say, okay, 6% of my overall portfolio should be in this sector. And right now, of that 6%, there's one stock that's taking 75% of the 6%. That's a warning sign. Another warning sign is 6% of this sector should be part of my portfolio. Well, right now it's at 12%. And that's due to one stock in that sector. Well, it's obviously time to start taking. I would go before that, actually. But here, let me give you an analogy here. Imagine two brothers, each planted an apple tree. Both trees grew strong and began producing more apples than any brother had ever seen before. The branches became so full that they started to sag under the weight. One brother said, "This harvest is a blessing, but I need to manage it wisely." So he picked some apples. He kept some to enjoy. He stored some for later, and then he also planted seeds from what he had picked to grow more trees. Used part of the harvest to plant more trees. The second brother said, "I don't want to interrupt this growth. It just is growing so well. I'll just let it keep producing." But the apples kept piling up, and one heavy branch, half the tree, broke off, hit the ground, bruised the apples, destroyed the harvest. When it broke, he lost a large part of the harvest, and he lost a part of the production of his orchard. The tree was still good. The fruit was not so good anymore, but the harvest had become too heavy for one branch to carry. The bottom line here is taking profits is harvesting the fruit. That's a good picture of profit taking. Taking profits is not cutting down the tree. Taking profits is harvesting part of the fruit. The stock may still be good. The company may still be productive. But if it gets too rich, it could hurt itself and therefore hurts your whole portfolio when it breaks off or breaks down. That's what trimming can be about. That's what pruning is about. It's being a steward over the profits as well as managing the risk. So if one stock has taken over one sector, or if one stock starts becoming a larger part of your portfolio, it's time to be pruning it back. Doesn't mean that you have to get rid of it, but you want to make sure that one stock cannot take down your whole portfolio. That's the bottom line of it.
Don't live or die by one stock, as I like to say.
There you go.
That's really good. You know, Mark, we've talked before about the idea of emotional investing and not falling in love with one particular stock, and I think that really applies to this as well. One question that I had for you that I've heard before, Mark, is the concept that we're talking about, which we believe is very good, of this faithful pruning that happens from time to time. I mean, this might be frequent, Mark, especially with what the markets have been doing recently. Some people will look at that and they'll say, well, that's not long-term investing. Isn't long-term investing just set it and forget it and not look at it again until 10, 15 years down the road?
That's one definition for long-term investing. Just set it and forget it. But stewardship calls us to be aware, awake, conscious, awake to consciousness, and do not sin. Do not sin. But that's a very important part of that verse. But awake to consciousness is just as important. It doesn't tell us to invest and forget, because then, I mean, if you look at the Dow Jones Industrial Average, look at the top, those 30 stocks on the Dow Jones, and then look at what they were 10 years ago. Are they the same stocks? No, not all of them. Look at them 30 years ago. Are they the same stocks? Very few of them. So effectively, if you did that, you would be in a losing position because some companies go out of business, some get merged. There's just all sorts of stuff that happen. You need to be a steward. That means, what was last week's verse? 1 Thessalonians 5:21 and 22. Test all things. That doesn't mean once you test it and you go back and you test it, you watch it, because things can break down, because things can go through the ceiling. And when they go through, when pricing goes through the ceilings, you can lock in those profits, but you're still a long-term investor because you didn't chop down that tree. You just harvested the fruit from it at this point to allow it to grow more fruit in the future. And by doing so, you've kept it from killing itself. I've had trees that actually, I had a apple tree in my backyard, in my previous house, and it got so many apples. That's where I got this analogy that it broke off one of the major branches. So effectively, I've lost the production of that tree by almost 50% for the next year and whatnot. It makes sense. It makes sense to prune. It makes even more sense when we realize this is God's garden. We're here to protect this garden, not to risk everything for another 50% gain possibility on that, but we'll still get that 50% gain, but it'll be on the original or a little fatter investment than the original than we had. And we'll have this other stuff producing over here as well. If you add that all together, you're probably doing just as well anyway, but safer.
It's great stuff, Mark. You know, Mark, along those lines, we got Clark from Ohio in our chat. He's asking a good question. A down day like today might be a good time to convert a down stock position from a traditional IRA to a Roth, save taxes on the distribution from the IRA, and hope that the stock recovers in the tax-free Roth. Mark, would you agree with this strategy?
Actually, it's a great strategy. If you know, oftentimes, usually in the second half of the year, we talk about starting to look for a tax loss harvesting. What a great way to tax loss harvest. If a stock is a financial steel type stock, but for some reason it's down and you have negative gains in it or you have losses in it, then what happens if you convert that? If you're able to sell that off, you get the tax loss there. And then if you buy it back in because it's a strong stock at a low price in the Roth, you have the upside potential with no taxes. Clark, you're brilliant, buddy.
That's awesome. Mark, is there
the Clark strategy?
The Clark strategy, that's right.
We're going to call that the Clark strategy from now on.
I love it. Mark,
we're going to put a gold seal on it. Clark strategy approved.
Is there anything in that strategy that someone like Clark or anyone else who's doing this needs to be aware of? Any pitfalls to avoid if you're going to be doing this?
I would think it'd be the tax wash, wouldn't it? You have to wait 30 days to buy it back?
Yes, you do.
Yep.
Yeah, you have to. You need to be careful about that. Doesn't matter which account you buy it back into either.
Yep.
So you just have to be careful. So if you sell it and you lock in that tax loss, just make a note, put it on your calendar. Free to buy that's still down if it still looks good.
Yeah. Awesome. Clark, great question, buddy.
Sam, you're nailing it today, too.
Sam,
I'm very impressed with everybody today.
Following our fearless leader, Mark. That's awesome.
You trained us well.
Exactly. There you go. Mark, let's do a quick question here. James was asking this in the chat yesterday from South Carolina. CRDO has tripled since late March. Should I continue to sit on it? In line with what we're talking about here today, Mark, what should James do with CRDO?
Well, after all the teaching we've done so far today on pruning, trimming, managing your profits, I'd say double down. No, just kidding. Obviously, this is one of those times again.
Put it all on CRDO. All your money. No.
You want to lock in some of those gains. It doesn't mean that you have to chop down the tree. It doesn't mean you have to take it all the way back to your entry point, but you want to trim it back, take some of those profits and replant them and expand your garden so you have more areas of taking profits. So one bush, one berry bush, or one apple tree or whatever does not dominate your garden and everything depends on it. So that way you have less risk and you still have production going elsewhere and with that same investment.
Well said, Mark. That's good. 610-363-1110. Folks, really can't say enough good things about our audience in our chat, and I hope that you all will find financialissues.org/watch. You can go there right now and join our live chat today. And that's also where you can become a partner too. You know, all these things that we're talking about, pruning, trimming, even looking for good buys, blue light specials, all that. This is the kind of the terminology that we use that our partners understand and, of course, have access to all the different buy list options, the broad list, the asset allocation models, the portfolio tracker. So now's as good a time as any, Mark, I think, to consider becoming a partner today. Financialissues.org. Just click that Become a Partner button. Be a great thing to do.
Hey, I got a question for you before we go to break here. We'll be back in just a second after this break. But is Sam's middle name Credo?
It should be. It should be Credo.
I think so.
Yeah, absolutely. It should be whatever the largest position in Sam's portfolio is at one particular time. I don't know if it's Credo, but it should be
not.
We got some phone lines open, 610-363-1110. We'd love to hear from you.
My wife and I help lead a Crossroads Kids Club, and one of the girls, she said, Mr. Dave, you keep talking about like you didn't really believe in Jesus and you were like dead or something, and then like you believed in Jesus and then you're like alive, and I want to receive that. And so we like just prayed there in our group to receive Jesus and owning this idea of life with Jesus for the first time.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound. And that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, give us a call, 610-363-1110. Mark, we have several folks in the chat who are wondering, based on Clark's strategy, the great strategy that he set forth in the last segment, how would we transfer in kind from a traditional to a Roth to be able to get the most out of, avoiding tax hits?
You can't transfer in kind.
Okay.
You have to sell it off in your regular account and buy it into your Roth.
Yep. Got it. So if you get that tax hit, don't panic because it's yeah, absolutely. Hopefully that can help you guys there. I know we had some questions in there for that.
Yeah.
Yep.
Yeah, my understanding of the rules, I've never been able to do that, but I'll double check just to make sure.
Yeah, for sure. 610. Mark, I'm sorry. Go ahead. I interrupted.
Yeah, no. So you sell and then you rebuy. Again, you got to wait the
30 days. Yep. After you sell and then
not
rebuy.
the wash, the warsh.
The warsh. The Kevin Warsh.
Kevin Warsh, yeah. My mom said, she's like, is his name Kevin Wash or Kevin Warsh? I'm like, no, it's Warsh.
It's Warsh. He's not a Midwestern.
Folks, for anyone who's new out there, by the way, this is a joke that we're making of the way that Mark says the word wash.
See what I put up with?
It's amazing. It's amazing stuff. 610-363-1110.
No respect. No respect.
No respect. Mark, here's a good question from Susan. She's 57. She's saying, I'm sorry if you've already addressed this, but I wanted to know, Mark, if you'll be developing a Timothy Plan ETF only strategy. So we have the fund models, Mark, but an ETF only. She's 57, her husband's 62, and they're interested in income and safer growth, quote unquote. Thanks for all that you do. What do you think, Mark? Is this on the horizon?
Yes, Susan, thanks for that question. I wish I was moving quicker on this, but it is on the project list, and I like the way you think. It won't be a pure Timothy plan because there are other things that we'll probably add into it, like precious metals and a few other things. But they'll all be ETFs. So it'll be an ETF asset allocation models so that people can take full advantage of the ETFs that are biblically responsible and have the diversification they need and the low cost that they need and a little bit of capital gains benefit over typical mutual funds. So thanks for asking that, Susan. Thanks for putting me on the spot. Guys, what's that button we use to block certain people if we could? No. Susan, really appreciate that. It is on the list.
I don't think I can block people. I can only mute Seth.
Sam can mute me, which is I'm told is a tool that wants to be used often.
Way too often.
Too much. That's right.
Yeah, again, Susan, right on. We need one. We need a set of ETFs for our partners because I love the mutual funds. Mutual funds are still good products. I love individual stocks, bonds, REITs, and stuff like that. But an ETF portfolio is a very efficient portfolio and can be very easy to manage. And I think it'd be something that would be great for all our partners. And then all we do is start occasionally, like quarterly or semi-annually, re-weighting the different slices of that pie depending on where the market temperament is at and where the relative strength is in each of those ETF sectors that we'll be listing.
Great stuff. Appreciate that. Hey, Mark, just for our new listeners, why do we, nothing against mutual funds, mutual funds can be good, but why do we prefer ETFs generally?
Well, ETFs have a little bit of benefit. One, they trade on the open market where a mutual fund only trades at end of day. You could wake up and be watching financial issues, and at 8:30 you can say, oh, I wanted to sell that mutual fund today because I think the markets are going to continue to go down, and I'd rather be out of that mutual fund that leans heavy in technology right now. So you go in and you place your trade. Guess what? The market comes down, and then at the end of the day, your mutual fund trades. After they calculate the new NAV for that day, net asset value, then it trades, and then you're done. With an ETF, you wake up in the morning, same thing happens. You put in your trade, and it's done within a second. The trade is executed in most cases that quickly. So you have that for one. It trades like a stock, but it has the diversification of a mutual fund. Also, most ETFs have less capital gain impact than mutual funds do, in the sense that the capital gains of the trading that goes in the mutual fund get passed on, where ETFs somehow, the way they're structured, that same thing does not happen. So you have the capital gains when you sell it, but you don't have, like at the end of the year, you have a capital gains on your mutual fund that goes against you. So a little bit of difference there, but also we see the expenses on a mutual fund. Usually the internal expenses are more than an ETF. So we got about 3 benefits there for using ETFs that we really like.
Yeah. That's awesome. Mark, we got a question here from George. George is wondering, how do I find info for investing in the coal industry on the financial issues list? George, I can tell you this real quickly. Use the search function under industry on the buy/broad list. And in particular, I just would type in the keyword mining, and you'll find at least one company right now that is involved in coal mining. Now, Mark, a follow-up question here is, what does the coal mining industry look like right now in terms of buys?
Yeah, so you take the easy part of the question.
That's right. I got the easy one.
I
got
see
the
how that
softball.
goes, Seth.
You get the curveball.
My eyes are on you, buddy. I'll tell you what. Actually, the coal industry is really interesting right now. When I had my practice, I had actually a couple of clients, but one client I really was close with, and he was an executive, a vice president at a very large coal company. So I had my fingers in there a lot, learning a lot about coal. The thing that hit me today is that coal's in a very tough spot. This administration wants to start utilizing coal, but the production of coal still is expensive. It's mining, it's hard, and there's still a lot of pushback, even if you call it clean coal and all that kind of stuff.
Or as Trump calls it, beautiful clean coal.
Beautiful clean coal.
Yeah, it's like trademarked.
Yeah. So we are digging a lot out of the ground, but a lot of that's going over to China still and being sold overseas and whatnot.
Mark, isn't there also the problem that this could change every 4 years? So you start digging and upping operations, then Gavin Newsom or someone comes in and shuts it down. So you're scared.
So there's not a lot of companies that we're seeing that have the financial issue steel and the possibility of good growth in them for the future. There's a lot of risk, and so I think the coal industry is kind of leaning on the positive side, but doesn't have the impetus of anywhere near AI or some of the other industries that we'd want to be investing in, or even like oil. So we got to be careful in it. I still think there are some companies I've gone through. I think I brought down some papers with me today from some of my research, and I have I don't know. It's about a half dozen stocks in the coal industry, and as I went through them, out of them, there's two possibles that we're looking at, and only one that I feel comfortable with at this time, but I'm still finalizing that. So it's very hard to find good buys that have the financial issue steel and the potential for consistent, strong growth with any dividends it pays. You got to bring those into it too.
And a catalyst maybe?
Yeah. So we got to be careful with all that risk out there on the coal industry, bottom line on that. Yeah.
Makes sense. Doesn't seem to be as... because I want to be careful saying this because there's risk in every industry, but
absolutely
there's been a lot of hype and build up and of course driving up the markets surrounding the tech industry. Obviously, the coal industry is a little bit different, though. Mark, is that kind of what you're saying?
Absolutely, a different risk, different reasons. Yeah,
for sure.
There's labor risks that the tech industry has less of. There's infrastructure risks. There's a lot of risk, and a lot of coal companies are heavy in debt from financing mines. And you look at that and you think, what happens if things don't go right? And they're in debt. We always know that debt amplifies other risk. That's the thing that most people don't think about. And this is a good place to end this conversation is whenever looking at a stock, if you're looking at high debt in it, remember, if things don't go right, if a company has high debt, they can't adapt to it. Let's say there is some deflation. A company does not have the margins to adapt to that because they have to still pay their debt. So it starts infringing on their ability to maintain their debt when their margins collapse because we have deflation or pricing is going down. Debt affects all risk. It amplifies them. That's one of the reasons we don't like risk or debt in any company or uncontrolled debt, unmanageable debt.
That's well said, Mark. There's always going to be some level of risk, but if you can manage that risk well by picking companies that have debt that is under control or no debt, like you said, all the better.
Yeah. You know what, Seth? This has been a really fun show. Really appreciate the questions. I really appreciate the insights. Think about it. Several of our listeners, our partners, wrote in and had great suggestions. We now have the new Clark rule, or the Clark rule. Susan, we had so many great questions and insights. And I love that about our partners. I love that you love the Lord dearly and that you're pursuing a deep, intimate relationship with Him that is reflected by the way you invest with biblical integrity. Look forward to you all being back tomorrow. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.